Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me is Brian Joyce, Managing Director with Nasdaq's Market Intelligence Desk, for an update this Monday afternoon on technical levels to watch in the Nasdaq-100. Brian, it's great to see you. Welcome back to Trade Talks. And it's been another interesting session. You know, a lot of movement in the market over the past couple of weeks.
Yeah, absolutely. Today's very interesting. We've seen a divergence between different groups in the marketplace now. The value names are really stepping up and with their outperformance. Today we have the Dow that's up about 1 to 2%, and the Nasdaq-100 is actually down 2%. So the weakness that we saw last week and really is in the last 2 or 3 weeks, and then the NDX is continuing on today. On Thursday, we went over a couple of levels that really did come into play over the last 2 sessions. And we can see here, this is Thursday's candlestick, and it closed exactly at the high where the market peaked, or the NDX peaked back in August. Actually, that's September 2nd. And then on Friday, we had new lows, and the intraday low bottomed essentially at this October high. And those are 2 levels we did highlight on Thursday. But we could see on Friday, we did rally back strongly. We closed higher, so we did finish the day positive. This candlestick is often referred to as a hammer candlestick pattern. A lot of times it's a common bottoming candlestick pattern. Confirmation of that would be an up move today, but we are not seeing that. So at the moment, this bullish reversal bottoming pattern here is being negated by today's price action.
So Brian, if we continue to reach those levels that you've pointed out, that seems to be quite a concern from a technician's point of view.
Yeah, I mean, what I've been looking at with the NDX is this pattern right here, this potential, head and shoulders topping pattern. The width of it here is about a little more than 1,000 points. So if we take 1,000 points down from the support line, the neckline, that would take you right to about the 200-day moving average. And then just below in that area, we have a price gap that starts at the 11,564 level. So we certainly don't have to go down to those levels. Last week's low, which was approximately 12,200, that's the key level now that I think shorter term traders will use as a risk level to maybe take a shot on the long side. We know we are down about 12% from the top. We rallied a little bit above that, so maybe it's down about 10% now. But certainly we've had a healthy pullback so far, and we just have to wait and see if the low is in or if we'll have new lows to come.
All right, Brian, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.